Everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hi.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, I understand that the USD moved higher yesterday.
Yeah, actually we had maybe the main characteristic move of the market yesterday was the strengthening of the US dollar. Market worries about the possible recession in the US economy, but also a global economic slowdown intensified. And that tended to drive safe haven inflows towards the greenback. It was a scenario which we had discussed also yesterday. We also see that the Fed's steep rate hiking path is also providing some support for the US dollar. So we may see the USD getting some further support should the market worries about a recession remain present among investors for today, maybe even intensify a little bit.
Did US stock markets also mirror the cautious sentiment?
Actually, they did not. US stock markets sent out mixed signals. They resembled more a wait-and-see position on behalf of investors. It seems that investors are still weighing the possibility of a recession, how deep or how shallow it could be, and practically try to keep a more cautious stance, but yet still want to see how this whole thing plays out.
Great. And how did gold's price react to USD strengthening?
We had a substantial drop of gold's price, given that the strengthening of the US dollar tended to weigh. So we may see some bearish tendencies intensifying should the USD actually reaffirm the negative correlation between the precious metal and the greenback once again.
Nice. What about oil prices?
Oil prices dropped and dropped considerably, practically on two factors. The first factor would be that we had the recession worries, which more or less intensified also worse for the demand side of the oil market, as should there be a recession, we may expect an economic activity slowdown. Hence, demand for oil may drop somewhat. And that tended to weigh considerably on oil prices, especially WTI. I would be noting also the fact that the US dollar strengthened may have also reduced the prices of oil barrels of oil. Overall, though, I wouldn't be striking out the bulls just yet. Should there be also worries about the supply side of the commodity, and especially about production levels of oil, we may see oil prices rising once again.
Interesting. What's on the calendar for today?
Well, we already had from Germany the industrial orders. Those were for May. We are having right now also from the Eurozone the retail sales for the same month. I would be highlighting in the American session the ISM non-manufacturing PMI figure. That's for the services sector of the US. Is expected to drop. It would imply considerable slowdown of economic activity in the services sector of the US, and that could practically weigh on the US dollar. I would be also noting on the monetary front this time from the US the release of the Fed's meeting minutes. That was for the June meeting. And should the minutes actually maintain a more hawkish tone, should policymakers be more aggressive regarding the tightening of the Fed's monetary policy, we may see the US dollar getting some substantial support here. At the same time, though, we may see also the worries about a possible recession surfacing and moderating the opinion somewhat, which could more or less moderate also the reactions for the USD.
Nice. What's happening with the euro?
The euro dropped considerably against the US dollar. We had also a very considerable drop of the euro against JPY, safe haven JPY, and to a lesser degree against the pound. So we had a sign of a broader weakness of the common currency. I would be noting that worries about a possible recession in Eurozone's economy are intense, especially given the rally of natural gas prices, which is used as a primary fuel in the Eurozone. So that could deepen the recession even further. Overall, the outlook of the Eurozone on economic level remains even worse than uncertain. It's actually more deepening. And that tends to weigh on the common currency. So I would expect the bearish sentiment to be maintained, given that the fundamentals overall do not seem to support the euro. It was characteristic that the euro hit a 20-year low against the US dollar. And for the first time, traders have in sight parallel level of the euro against the US dollar, which will be meaning practically an exchange of 1-to-1. Such a drop in the weakening of the euro tends to create also inflationary pressures within the Eurozone economy, which could intensify further the situation, as the ECB may have to actually tighten its monetary policy at a faster pace, and that could create practically, or if you prefer, lessen the opportunities for growth within the Eurozone, actually deepening a possible recession.
Should also pound traders be worried?
Yeah, pound traders, actually the pound got a shake-up yesterday as we had some political instability in the UK government. It was characteristic that UK Finance Minister Sunak and Mr. Javid resigned from Johnson's government. Johnson per se stated that he plans to remain the PM. But overall, we have to say that the resignations as such signal increased instability for the UK government. And we have to note that traders were already worried about the outlook of the UK economy, with the possibility of stagflation practically looming over it. Now we have to add to that also the possibility of political instability within the UK political scene. So that tends to weigh also on the pound. Fundamentally speaking, the situation for the pound remains substantially worrisome. And I would expect more or less traders to be more tilted to the downside for the pound.
Any last comments, Peter?
Well, we will have to wait and see how the cautious sentiment of yesterday will be expressed today once again. If it's going to be a little bit more moderated, or if it's going to remain in the same intense movements we saw yesterday. On the flip side, should more or less a more, or if you prefer, a less cautious sentiment surface in the market and some optimism arise, especially for US stock markets, we may see some corrections in the movements of yesterday.
Interesting. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation today. We make a start with the US dollar index chart. It's the 4-hour chart. Note the rise of the US dollar index and its subsequent stabilization. Let me make a readjustment here, just to get a clearer view. Now the index actually broke above the 105.55. The movement had started already on yesterday's presentation. And during today's late American and Asian session stabilized between the 107.50 and the 105.55. We tend to maintain a bias for a sideways movement initially for the index between the pre-mentioned levels, the 107.50 and the 105.55. Yet we would highlight that the RSI indicator remains steadily above the reading of 70, which tends to remind us that the bulls are still present for the index. Should the bulls actually take over, we may see the index rising, breaking the 107.50 and start aiming for the 109.50. Mind you that we're talking about a record high level. Let's have a look. On a monthly chart, we have seen no higher levels since 2014. And I would dare to say that probably the bulls are still in charge here. We will have to wait and see how the American session begins in order to get a better view on how the market sentiment actually is moving. I would also note that the RSI indicator that the price action of the index practically slowed down after hitting breaking actually the upper Bollinger Band. So it seems like the price action is waiting for some room to be created. In my opinion, some further room is still needed. Other than that, should the bears take over, say enough is enough, take over, I would expect the price action of the index to break below the 105.55 and start aiming for the 103.20. Let's have a look now at Euro USD, which, with the common currency being the main loser of the day. Oh, yeah. Now, Euro USD dropped heavily, breaking practically, let's have a look, the 1.0355 support line, which has now turned into resistance. And it's currently aiming for the 1.0210. Going to have to change this into a resistance line given that the price action has moved decisively lower. And we set our next support line at parity level. One, two, three, four. We'll do a summary adjustment on the S2. Let's have a look. Okay, we're going to have to download more history here. It's going to take a while and we don't have exactly the time for that. But okay. We're going to have to readjust the levels at chart 4. And practically I'm going to be adjusting this one at 110 pips as we had the presentation this morning. A round figure of 1.01. Being placed at 1.01. S1, the first support line, which is about to be tested, is being placed at 1.0210. First resistance line to the upside, the 1.0355. Second resistance line being placed at 1.0480. And the final resistance line, practically finding nice touches here, is the 1.06. It is. So we have a downward movement which continues. This is no longer relevant. Let's delete this. And you can see that the RSI indicator is below the reading of 30 and seems to imply that the bears are still in control. However, the pair has reached oversold levels and could be ripe for a correction higher. Should the bears actually maintain control, I would expect the price action of Euro USD to break clearly the 1.0210 and start aiming for the 1.01. Note that I would be highlighting practically here two elements. The first element, three elements if you may. The first element would be the downward motion, the steep drop and the moderated continuance of the downward motion despite the slight correction here after breaking the lower boundary of the Bollinger Bands. Now we have enough space for the pair to move decisively lower and start testing the 1.0210. The second element would be the RSI indicator, which is below the reading of 30, implying that the bears are still present, and at the same time, maybe flashing a warning here that the pair has reached oversold levels and may be ripe for correction lower. The third element I would like to highlight here is that the parallel level is now in the trader's sights, even as the lowest support level. And it's crucial also psychologically for traders. Once again, though, should there be a downward motion, initially we would expect the price action to break the 1.0210 clearly and start aiming for the 1.01. On the flip side, should the bulls take over, I wouldn't be surprised to see the price action bouncing on the 1.0210 support line, reversing course, breaking the 1.0355 and aim for higher grounds. For a bullish outlook, I would require clear breaking of the 1.0355. Anything else which remains between the range of the 1.0355 resistance line and the 1.0210 support line could be considered as a sideways motion or some kind of stabilization. Note how the steep downward movement of the pair has been moderated somewhat, which implies a slowdown of the bears here. Let's have a look at cable, which shows signs of stabilization more clearly. Let's load this and we'll go hunting later on. For the time being, we switch. Sorry about that. The 1.2070 support line into resistance line, coloring it in red, and we're going hunting practically for the third support line, being in the 4-hour chart. Going a little bit way back. Hopefully the 4-hour chart will include it, otherwise we will find this final support line at the daily chart. A little bit lower, here we go. So we have another support line being placed at this point, which is low, at 1.1640 in green. It could go even a little bit higher. I'll keep it a touch. So let's readjust. Let's correct the labels. Yesterday we had a deep look into stock markets, gold, and the US dollar. Today we're going to be focusing more on FX market. We're now in table, and the final resistance line now is being placed at 1.2325. The second resistance line is being placed at 1.2175. First resistance line at 1.2070. Second support line being placed at 1.1815, sorry. And the final support line being placed at 1.1640. We tend to maintain a bearish outlook for the index despite the stabilization, given also the downward trend line. And the RSI indicator, which has corrected a little bit from the lows, recovering from the lower than 30 reading, and is now just above it. On the other hand, we can see that the stabilization has allowed for the creation of some room between the price action and the lower Bollinger Band. The price action, which is currently testing the 1.2070. Should the bears actually take control over the pair, we may see it breaking the 1.2070 and start aiming for the 1.1815. Now, for a switch of the bearish outlook in favor of a bias for a sideways movement, we would require a clear breaking of the downward trend line and the price action to remain between the 1.1935 should read. Between the 1.1935 and the 1.2070 in this range. For a bullish outlook, we would require clear breaking of the prementioned downward trend line, a breaking also of the 1.2070, and for the pair cable to start actively aiming for the 1.2175. Other than that, let's go now to USD JPY. No major movement. A sideways motion continues. Practically revolving around the 135.60 level. I would still maintain my bias for a sideways movement, yet the first support line could go a little bit higher as we have a reaffirmation of this level somewhere here. Definitely in green, but that would be the 134.45. So we're tightening the range bound movement. By 45 pips. So we maintain a bias for a sideways movement between the 134.45 and the 136.75, with the 135.60 practically, it's not a median, but still the market action revolves around this level. Should the bears take over, we would expect the price action to actually break the 134.45 support line and start actively aiming for the 133 support line, which used to be a resistance line. However, as the price action now is above it, has turned into support line. Lower than that, we also note the 131.30. Note how it beautifully practically reversed the downward motion around the 16th mid of June and turned into an upward motion. Should the bulls take over, we would expect practically the price action to break the R1 135.60, break also the 136.75, which was tested once here, twice here, and start aiming actively for the 138.30 resistance barrier. We would like to note that the RSI indicator below the 4-hour chart has moved a little bit lower than the reading of 50, yet remains pretty close. So there is no decisive bearish movement here. Once again, overall, the fact that the price action tends to remain within or near the median of the Bollinger Bands, and the Bollinger Bands are converging, implying less volatility, tends to preserve our opinion for a sideways motion for now. Let's have a look at USD CAD. USD CAD that jumped, and that was a result practically of two factors. The first factor was the strengthening of the USD side of the pair. What we're looking at is the 4-hour chart. And I would note also as a second factor that the CAD weakened due to the drop of oil prices. We see that later on. Interestingly enough, and quite happy as an analyst, the pair rose, broke the 1.2970. However, our 1.3075 resistance line held, or at least it was tested, not clearly broken, and the pair corrected lower. It was evidence that the level was noted by traders. Let's make the necessary adjustments here. We're going to be converting the 1.2970 from a resistance line now to a support line. And we're going to be going out for the lookout for a new resistance line. Yep. Let's drill down to the 4-hour chart once again. Unleash. We'll have to go way back here. This is it. I would be highlighting this level. And that's the next one here. So that would be the 1 point, in red please, as it's a resistance line, the 1.33. And we're going back practically up until beginning of November 2020. That's 2 years back plus. Let's readjust and correct the labels. A new final support line, the S3, is going to be now the 1.2730. Second support line being now the 1.2865. Third support line being the 1.2970. The first resistance line to be placed at the 1.3075. Second resistance line being placed at 1.32. And the final resistance line being placed at 1.33. It's almost as if price action moves in a scaled manner of around 100 pips. You can see that each level is almost 100 pips apart from the next one. It's quite interesting. So for the time being, we tend to maintain a bias for a sideways motion for the pair, given its stabilization after hitting on the 1.3075 ceiling. Should the bulls take over, given that the RSI indicator remains just below the reading of 70, implying a rather bullish sentiment is still present. We may see the price action breaking above the 1.3075 and start aiming for the 1.32. However, that would cause practically the RSI indicator to break above the reading of 70, reaching over both levels, and may start implying a correction lower once again. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1.2970 support line, and start actively aiming for the 1.2865. Let's have a look now at the Aussie, AUD USD, which dropped yet. It's a little bit unconvincing here. Okay. The main idea here, in my opinion, is this. We have a new support line here. 2 touches. Seems that traders are taking notice of it, and it would be at 0.6760. The support line of 0.6850 now turns into a resistance line. And we're going to need a new support line down low. Going to have to drill out to the daily chart. Here it is. Oh yeah, this touch here. Let's zoom in a little bit. In green, signaling a support line, and it's going to be placed at 0.65. Forward chart, readjusting, deleting this one. Let's correct the labels. $0.65 being the final support line. The S2 being placed at 0. That would be 6670. Nope, 0.6620. The S1, which has been recalibrated, I remind you of that, would the R1 being placed was a prior support line, now turned to resistance line, given that the price action the R2 being placed at 0.6995. Let me check this 1 minute, please. No, 0.6950. Sorry about that. And the final resistance line being placed at 0.7035. Moving now to USD CHF, safe haven CHF, Swiss franc. Okay, we had the decisive move upwards, which is quite interesting given that the US dollar in this case strengthened against the CHF, safe haven CHF. However, if you see the movement against USD JPY, it goes sideways. And definitely the fundamentals differentiation between the two currencies contributed to that aim. Let's now make the necessary adjustments, correcting the resistance line into a support line, as the price action has broken above it, and move the S3 too wide. That's another level. Oh, I'm going to be keeping this one. Has a double touch here. $0.9990. Yep, that should be it. Let's make the corrections on the labels. New final support line being placed at 0.9455. Second support line being placed at 0.9550. Third support line being placed at 0.9640. First resistance line at 0.9765. Second resistance line being placed at 0.9698, 75. And the final resistance line being placed at 0.9990. And what's the opinion? We tend to maintain a bullish outlook here. And that's based practically on two reasons. The first is we have a nice upward trend line guiding the pair. And that's since the, let's make the adjustment, since the 29th of June, there was even an intensification. Also, the RSI indicator remains close to the reading of 70, implying a bullish sentiment of the pair. However, should it cross above it, it may start reaching overbought levels. For the time being, though, there is still room for maneuver for the bulls here, given also that the price action stabilization over the correction lower and stabilization over the late American and Asian session today tended to allow for the Bollinger Band, the upper Bollinger Band, to move higher than the price action. So there's some room for the bulls here. Note that the correction lower practically dropped the price lower than the upper Bollinger Band. And since then, the price action has moved higher, however, at a much, much more moderated pace. Should the bulls actually maintain control, we may see the price action aiming, if not reaching the 0.9765 resistance line. A possible stabilization would imply practically that the price action remains between the 0.9765 and the 0.9640. However, a breach of the upward trend line would be required here. Should the bears take over, we would expect the price action to reverse direction, break the upward trend line, break also the 0.9640, and start actively aiming for 0.9550. Could look something like this. Let's have a look now at gold. Actually, I would like to see WTI price first. Steep wide drop, breaking all of our support lines, and then some. It's very characteristic how steep the movement was of WTI's price. We will have to recalibrate practically the support and resistance lines into wider spaces as the volatility for the commodity has increased substantially. something like this. And note that all these are going to be now into resistance lines. And this one could move even higher, however, I would prefer it here, with this touch here. Let's go hunting now for some support lines. It's valid, but it's still pretty close to the price action. Yet it was reaffirmed. I'm keeping this one. And let's go further down and see the third. Let's readjust this into green. $92.60. This is it. At 87.20. Note the touches here and here, and how the level provided some resistance here and here. So it seems to be quite valid. However, once again, we have to color this green to signal that it's a support line. Let's make the readjustments. Let's correct the labels. Now the final support line is being placed at 87.20. Second support line being at 92.60. I know that the support lines are not symmetrical. Thanks for pointing that out. I would say the truth, they don't have to be. The main story here is to find as more valid points where the price action bounced for support lines or hit the ceiling for resistance lines. It's important to know or to find out how strong as a resistance or support line level actually is, rather than for the levels to be symmetrical as such. Symmetry in this case is not our main, it's not our objective at all actually. The main story here is to find, should the price actually drop further, how far will it drop? And to find that out, we're checking out past levels which were successful in reversing the downward motion in case of support lines. In case of resistance line, vice versa. Should the price rise, how far will it rise? And to get a clearer view, we find past levels where practically the price action was unable to break above them. The resistance was strong. So there is, I would dare to say here, a general principle, if you prefer, that history tends to repeat itself. It's characteristic that there are levels which indicate exactly this. Now let's move now to the first support line, which is being placed at 95.70. First resistance line is going to be placed at 101.25, which used to be a support line. Note the touch here. But as the price action has moved decisively lower, its role has now been reversed towards a resistance line, 25. Second resistance line being placed at the 105.10. And the final resistance line being placed at 109.53. Sure, it could go a little bit lower. 9.50, yeah. So it's $109.5 per barrel of WTI. WTI seems to show some signs of stabilization after hitting the 95.70 support line. So one could argue that a stabilization is taking place, yet I would like to see more candlesticks remaining at near the same levels in order to switch my bearish outlook in favor of a sideways movement, but it's quite a possibility here. I would note though that there is an indicator below the reading of 50. Actually, it's near the reading of 30, just above it. However, the bears here seem to be losing some steam as they were lower than the reading of 30, moved a little bit above it and have a slight nick to the upwards. Should the pair stabilize, I would highlight the 101.25 and the 95.70 as possible levels, ranges for the price action. Should the bears regain control, we may see the price action breaking the 95.70, start aiming for the 92.60. Note that there was some kind of moderation here, especially in the late Asian European session, early European session. And we may see volatility for WTI's price being more modest, but still, should there be extensive volatility, I would expect the price action to break the 95.70, the 92.60, and start aiming for the 87.20, if not even reach it. We had a wide drop yesterday, which was for around $13.7. Now the next drop we have noted is for around $8, which is quite lower, in our opinion, reflecting also a moderation of the drop of prices. I don't know. So that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Everyone, my name is Emily and welcome to our daily trading tips. The financial markets tend to change all the time. A good trader should either adjust his trading to reflect this change or can place trades and wait for the market to move in the wanted direction. Having different strategies and ideas on the side can increase your winning possibilities as it forces you to think in terms of different time frames and trading sessions. Some of the best forex traders in the world are excellent at mixing up a number of strategies. Basically, you should be able to change your approach with the way the market changes. Embrace change, stand in the midst of it. This will make you wiser and tougher as it will challenge you. Moves in forex markets are big surprises. If everyone expects something to happen, they position themselves before the event. Basically, if the event actually plays out as expected, very little may happen during and afterwards in terms of market action. But if very few expect something to happen and it does, we usually see sharp moves in the following minutes, hours, days, as investors reevaluate their views and reposition accordingly. In such instances, positions in the wrong direction incur losses and sometimes extensive ones. It would be advisable, in order to protect your funds, to use a stop loss when placing an order, or diversify your positions in order to lighten losses. Strategy doesn't need to win all the time to be profitable. Many traders only win 50 to 60% of their trades. However, they make more on their winnings than they lose on their losses. Make sure the risk on each trade is limited to a specific percentage of the account and that entry and exit methods are clearly defined and written down. That way, they'll be easy to remember and keep track of what works for you. It would be advisable to start out with a smaller investment volume so that the risks are limited, and also be sure to use stop loss and take profit pending orders. Should you be about to begin trading, it's expected that you may incur more losses than wins. Should they come up, consider them as an investment to accumulate experience, because that experience is to enable you to be more profitable in the future. Thank you so much for joining us today, guys. Stay tuned for our tomorrow's live. Bye-bye.